Starting with the new financial year, three publicity banks are going to now become one. That is Bank of Baroda, Vijaya Bank as well as Dena Bank are coming together to under the same banner of Bank of Baroda starting the 1st of April. To discuss this amalgamation as well as the future plans for the bank, we have with us Mr. P.S. Jayakumar, the MD and CEO of Bank of Baroda. Mr. Jayakumar, let me first start with this 5,000 crore capital that the Bank of Baroda recently got from the government. How exactly are these funds likely to be used for this merger, and if whether you will need more funds in the future?
Now, the total amount of CET1 capital as we closed December between the three companies was about 9.82%, and this would add up by another 1.02% on account of this 5,000 crores. In addition to that, we have various pockets of capital that is available. One of which would be to go with one of which is the profits of the year, which we bring into recognition at the end of the financial year. We have a certain amount of plan of raising money through employee stock plan, and we also plan to raise 81. So there is a pocket of capital that is available without any significant market access right there. So in addition to that, in general, we become more efficient in the use of capital because of a focus towards better quality accounts. So keeping all of this in mind, I think we have a reasonable runway to grow. Around third quarter, I think we can go with a market fund rise on the assumptions that we will be able to show continued growth, which would then be saying that notwithstanding the amalgamation, the business is business as usual. And we also hope to show considerable progress with respect to amalgamation. In addition to that, as we go into the following year, the next quarter, next year's gross profitability looks quite good. This year, as of December, we made 13,000 crores of operating profit between the three banks. Right. Just simply extrapolating into next year, it probably is between 18 to 20,000 crores. Okay. Now, if we assume a lesser level of profit, lesser level of losses on account of non-performing assets, because we move to the recovery cycle, then I think we have a reasonable amount of organic capital coming into the financials in the next year. So I think with a little bit of luck and a lot of work, we can support the growth of our business without dependence on any further government handout. That really is what our that is our operating assumption now. Supposing the government comes forward and says here is a large squeeze of capital, we would obviously take it, but our growth to a large measure is not predicated on further infusion of capital. This money, if any, is towards funding some of the gaps that currently exist in Dena Bank, and some of which would get used for the purpose of dealing with the convergence in accounting standards within Bank of Baroda, which has a slightly more conservative accounting standards and the accounting standards of Dena Bank and Vijaya Bank.
Fair enough. Now, on paper, these three banks have come together. They're one entity now. But as far as the actual ground level merger goes, that is to say on a branch level, on a systems level, on the processes level, how long do you think it's going to take for Bank of Baroda to become that one large entity?
Now, let me put it to you this way. Starting tomorrow, our customers of, say, the erstwhile Dena Bank would continue to deal with Dena Bank. The customers of erstwhile Bank will continue to deal with Vijaya Bank. And it will not be possible, for example, any of these two bank customers to come to Bank of Baroda and access services because the technology platform in terms of integration does not exist or is getting built up. Come May, there are about 6 to 7 basic services that will be available. These are withdrawal of cash, deposit of cash, balance sheet, balance information, etc. And then the sequence of interoperability keeps increasing every quarter as we have new rollouts. In a 12 to 18 months time, we move to a core banking system, which simply means that we only have one banking platform, and that would effectively truly be able to make everything interoperable. Okay. So the process of amalgamation is going to take time, but it's not that everything is happening on a single day. There is going to be progress along the path. That's so far as technology is concerned. As far as the operational risk structure is concerned, over the last 4 months, various teams have been working together among the three banks to create the new product programs. And I think as we step in tomorrow, we do have a common product program across all our banks for 90 to 95% of the products.
Sure.
I think that is not a mean achievement in putting it together. And so I think that part of it is done. There's obviously going to be some amount of challenges because everybody would not be, would have not fully been trained, or even if they're trained would not have a recollection, so on and so forth. So we got to give way for some of those challenges, but by and large, we are there as far as product is concerned. As far as people is concerned, I think starting today, the compensation structures are absolutely harmonized. We have put together the people in terms of the general manager level and above. We're now working on the next level of people, and I do think by 1st of July, we would substantially go to a single organization, which is to say that people will report, the managers of employees would not necessarily from the same institutions.
Sure.
So that part of the process will move on. Insofar as branding is concerned, we have a brand which faces the customer today, which is Vijaya Bank, now part of Bank of Baroda, and we'll converge to a single brand as we come closer to interoperability of the two systems.
Sure.
So I think it's a step-by-step process. There's no big bang happening on one day, but every month we'll be making some progress, and we hope in the next 12 to 18 months' time we completely complete all the process and truly move to being one institution as seen by the customer.
Fair enough. Now, whenever you have mergers of this nature, a consolidation phase going on, there's always the question of culture, workplace culture that is being discussed. Because often different organizations have different ways of working, the way they treat their employees, the way employees report to their bosses, everything varies. What can Vijaya Bank and Dena Bank's customers expect once this merger is completed?
Now, as far as Dena Bank and Vijaya Bank customers or customers of Bank of Baroda are concerned, in the initial stage they continue to deal with the base bank. What we might see in the initial stage, what we start getting is more amount of product sets for the customers.
Right.
Wealth management program in Bank of Baroda maybe will be extended to customers of Vijaya and Dena Bank, erstwhile Vijaya and Dena Bank. Vijaya Bank's planters lending or other specialized programs, small rate transport operators will now be available to Bank of Baroda customer. Mm-hmm. And for some of the basic services in respect of interoperability is achieved, there would be a fair amount of reach.
Sure.
Now, on the technology platform, we're trying to move ahead of the customer experience, even as we focus on the core banking migration, and try to get similar levels of customer experiences across the system. For example, we use tablets and mobile applications to process savings account, and we open 500,000 of them in Bank of Baroda without a single paper. Now, it's going to be far easier to get that application into Dena Bank and Vijaya Bank than it is going to be for the core banking systems to come together.
Sure.
So, if you're going to be the customer of any of these banks, you could expect broader product range. Obviously, if you're in Dena Bank, you get more product range, including ability to borrow relative to Bank of Baroda. All customers would have access to a larger number of branches and ATM network,
sure.
But the kind of services that will be available would depend upon the technology releases that are concerned. That would happen. Mm-hmm. So I would think that would happen. And finally, the customer experiences and the cycle time would start improving significantly. And so in essence, the line we have got, Behtar se Behtrin, actually speaks to two constituents. It speaks first to the customers, saying that you should expect better services, better products, better distribution on account of this merger. It also speaks to our employees and all of us internally within the bank and saying we ought to evolve into better managers for tomorrow. That in substance is the approach towards this amalgamation and the expectation people must have who are the results coming from here.
Fair enough. So the last big merger that happened within the Indian public sector banking space was with respect to SBI and its associate banks, as well as Bharti Mala Bank. So at that time, SBI had announced these voluntary retirement schemes for some of the senior employees who may want to look for an exit. Are you introducing something of that nature?
See, voluntary retirement can be introduced for any of two reasons. It can be used because there's excess labor force. It might just be done to rebalance the workforce in terms of getting different set of skill sets of people in place.
Sure.
As of now, I can tell you very clearly there isn't any voluntary retirement program that is available.
Okay.
However, if employees of a bank do not want to join because they technically joined Bank of Baroda, then they have the option to exit not as a voluntary retirement but as though they retired in due course.
Okay.
Okay, so that's really what it is. So now, what does it bring us here? I think overall there are 2-3 things we must keep in mind. One is that if you were to take our bank and take a bank of our size into other private sector bank, you would find actually the number of employees are more.
Okay.
And the reason for that is there is a lot more people facing the customer side, the sales side of the equation.
Sure.
We relatively have less. So we need to build more people. And then there are a number of other specialized areas in respect of which we need to build talent, whether it is analytics or technology or various other kinds of product structures. So in essence, what I'm saying is that we are likely to be, we will be job creators and not job reducers or destroyers.
So coming next year, you will hire more people?
We will hire, but what is going to happen and what's happening everywhere is that nature and the skill sets are going to change, keeping in view the changed bank times in banking.
Right. Right. But when you're talking about rebalancing the workforce, is that something that's...
As of now, we have an attrition rate of about 3.25% each year on its own due to retirement. And on 85,000 strength, that's fairly large number.
Right.
So I think there is automatically a reduction in the people. So as I said, we would have more staff than what we did, except that the nature and the composition of the employees would be very different than what we have at this point of time.
Traditional banking,
and
public sector bank employees.
I wouldn't put them into public or private. I would say that we need more customer-facing people, more sales people, and more specialized skills in different areas than the conventional hiring through a common entrance examination across the banking system. In the public sector,
more flat hiring, sort of.
There'll be more different kind of skill sets that will be there. We still will follow the process and everything else that are laid down, but we'd have more specialized workforce, effectively to say. So we see that change happening.
Okay. Is there a need to rationalize the workforce at the current stage it is?
No, as I said, for these various reasons. One is that there's no particular reasons to believe skill sets cannot be acquired.
Sure.
Right. And so wherever there are gaps, I'm sure we would substantially succeed in reorienting workforce. We found, for example, in our experience in Bank of Baroda, employees whom we consider sub-staff have become excellent collection people. Many of them are outstanding providers of customer services, branch managers, customers recognized by them. So I do think with the proper amount of input, we can make those changes. So as of now, there are no plans for voluntary retirement, there is no felt need for that program.
Fair enough. In your letter to the customers of all three banks, you mentioned that as of now you're not looking at rationalizing or shutting down any branch at this point in time. But in the future, I mean, I'm sure you've done your studies already, but obviously there are places where branches overlap.
Of course.
How many do you think branches will need to shut down?
I think on a broad level, about 10% of our branches would have overlap or would require to be changed. That in our system comes down to, let us say, 900 to 950 branches. Now, the first thing that we have to accomplish to consolidate branches is to get the interoperability in the system and the technology challenges. So let us say it takes us 6 to 9 months time. So the first kind of changes that we may see in the relocation of branches is from there. Besides, there are some mandatory notice period and all that one has to fulfill before changing the branch. In addition to that, getting a branch place, renovating, all of it takes some time. What would change though is that wherever we overlap, as for example in Horniman Circle we have 2 branches facing each other. One of them may be relocated, but to a different micro market in the same district. Okay. For example, we do not have people say we don't have enough branches in Malabar Hill, or we actually do not have enough branches there, or we're not present in, say for example, Navy Nagar. We can relocate people to those locations. Okay. So yes, there would be a relocation of branch, but it's not the same thing as to say a reduction of branches. Okay. Overlay that with the fact that there are going to be about 200 to 250 more million people in urban India over the course of the next 20 years. Take those numbers together, then we come back to the conclusion we probably need those many branches. Some adjustment and relocation is going to be done. So many of it will be in the same district, some will be elsewhere. So there is no need to look at shutdown. There may be some shutdowns that are happening, but they would have happened under the normal process. There may be some branches Bank of Baroda is working towards shutdown for whatever reason. Right. Those would happen, but you must understand this has got nothing to do with this amalgamation. Okay. They are all commercial decisions done in normal course, and 2 to 3% of our decisions to make branches do not necessarily work well in the way we thought it would.
Fair enough. We've seen the employee unions oppose this amalgamation. They went to the Supreme Court recently. Of course, the Supreme Court threw the case out. But according to you, why is it that you're facing some kind of opposition from these unions?
I have met most of the union leaders. They've been very appreciative of the amalgamation. In any scheme of things, 10 people can file a case, but I don't think there is any really deep-rooted or even significant opposition to it. In fact, there is a court case still not heard against my appointment as a CEO of Bank of Baroda, which happened 3-4 years before. So cases do get filed. They do get, and it's a democracy, and different points of view needs to be there. But if you describe the decision as what is sought out by the largest number, or what the largest number of people feel, I don't think there has been any opposition. There have been misgivings which have been addressed in normal course through communication, which is why I think at the end of everything you put it together, the integration exercise has been very smooth. Now, can 5 people disagree and file a court case? You can. So that is not symptomatic of any big issue sitting over here. I do think overall, and it is owed to many factors. I would think it's the public sector identity. It's also recognition that scale is important today. It's also the fact that our CEOs, Shankar Narayanan and Karnam Shekhar, did a lot of work with respect to getting the amalgamation, getting the employees to see it. It's a lot of work DFS has done, heavy lifting they've done in the background to make sure everything gets done in a speedy time. Our board has worked, and so are the others. Advice, other boards have been very supportive of this whole thing. So the result is a success as a result of support from everybody else. But it would be completely wrong to say that there is any kind of a significant opposition to this whole thing.
All right. Let me get to the effects of the merger and how that is going to change the bank as such. In the near term, you mentioned that there are some of the capital that you're receiving at this point in time, and what you will be raising in the near future will be used to address the NPA issues with respect to Dena Bank. But what do you think Bank of Baroda needs to do to ensure that these NPA ratios are brought down to a more acceptable level?
I didn't say it will be used to address NPA issues relating to Dena Bank. From 1st of April, there is only one bank, and the problem, the goodness and the badness is collective to the same institution. I think the capital is required to support credit growth. Is there to support the growth. A certain amount of capital is being brought in because there is a deficiency in the opening balance sheet, which is why the 5,000 crores has been contributed. But as I said, there is enough headroom for growth with the capital level we have got. And as we go further down the journey, we have ability to raise in the market. And besides, logically and philosophically speaking, one has to throw organic capital to grow. One cannot be determined, ever run any business based on every year capital infusion from one shareholder or the other.
Correct.
So I do think, I would tend to think, therefore, that we have room for growth, and we should be generating adequate amount of organic capital, and as things start settling down, we would be able to go back to the market and raise capital on reasonable terms.
But what about the NPA problems then?
Okay, the NPA problems are there. We have about 30,000 crores of net NPA number, and we probably have some in the pipeline of accounts that can turn into NPA.
Is there any assessment of how much?
I would think by and large that number would not be significant. That recoveries and slippages would kind of offset each other.
Okay.
So I think if we are going to move to the recovery cycle, as many of us feel, then I think this NPA problem might actually turn out into right back, the benefits of right back. It's happened in the past, it will happen again. So one hopes that the right back scenario and the recovery scenario happens early.
Sure.
If it doesn't happen early, as it can, if it gets delayed, then during this period, even if the NPA doesn't deteriorate, we would have to continue to increase in aging provision, which will reduce the net NPA number, but would not be able to throw up organic capital for the next year.
Okay, fair enough. On a more medium-term note, now, the main argument behind this amalgamation was that we create a large enough bank. Now, they're saying, according to what the finance ministry said, as well as what assessments are saying, it's going to be the second largest public sector bank in the system, third largest in the whole country. When you look at the size of the bank that is post-amalgamation, do you think that Bank of Baroda's responsibilities towards things like funding large capital, funding large companies, funding large infrastructure projects, all of this is going to go up, and therefore you will have to participate more in some of these bigger projects?
So far, all the decisions we have made have been based on commercial considerations. The decisions might have been, in hindsight, intelligent or otherwise. But so far in my 3.5 years, I've never had any call and any request from any political person to make investment in this project or that.
Sure.
So what we do is entirely a commercial decision. Now we are participating in infrastructure projects and we don't participate in infrastructure projects, and those are based on risk assessment. So I think we should not work with the notion that's because we are bigger than what we were yesterday, it necessarily means we're going to take a riskier projects and result in a worse balance sheet. I think that would be a flawed assumption based on the actual, based on what the actual experience on the ground has been. We've never been asked to take any project or finance anything or do anything with any particular customer.
Not necessarily risky, but I mean there are plenty of good projects built by large companies in this country. But my question to you is that going to increase now that you're a much bigger bank than what you were yesterday? As you said
it would depend upon the pace at which our capital grows.
Okay.
We can assume different scenarios, but our bias would be to continue to grow granular credit, and bias would be to take less risk on single exposure.
Okay.
That will remain till such time as we return to normality with respect to the net NPA numbers. If the net NPA numbers come to say 15 to 20% of our capital, which is around 10 to 12,000 crores, then I think we can take a lot more chunkier projects. But right now, the decision to move is impacted by our current set of issues we have on the net NPA number.
Sure.
And we will have to remain careful and be in a very optimized position with respect to assets lending that we currently do. And frankly, there may be other institutions who are better placed than we are in certain types of project, and that's the way it is.
Fair enough. Let me ask you this question about what the Reserve Bank of India did recently with respect to large exposures framework. Now they've tweaked it a little bit. They've ensured that every time some of these banks breach this limit that they've set, they don't have time to sort of adjust it. The RBI immediately penalizes it according to what the guidelines came in just earlier today. To your mind, do you think that some of these things will need to be tweaked in the combined balance sheet, that you will have to see whether these combined exposures...
Whatever data I have with me, it's not suggestive of any of those things. I don't think with Dena Bank and Vijaya Bank together on a single exposure, we are close to the peak corporate exposure. Right. So we are quite okay there.
Quite okay there. So then no management on that front.
And so the other thing is, as far as delta growth is concerned, even if there are no specific RBI direction in the context of where we are in terms of the net NPA number, that would be the sensible thing to do, which is to manage the exposure.
Right.
If you look back at Bank of Baroda, who are some of the other banks, during this period when we had significantly high NPAs, we generally have been able to provide better and do better. Part of the reason is the peak exposure to many of the companies were substantially lower than what others took. Therefore, you could take the write-off or you could take the write-down and move forward. So the learnings from that is that for a bank of our size with a certain capital and a certain NPA structure, we have to be extremely balanced about what is a peak exposure that we could take to any single company, and those will remain a little conservative, and that has to be the case till our risk profile or the risk in a balance sheet comes down, as represented by the net NPA number.
So going forward, the next few months, it's at least for the next 12 to 18 months, it's going to be a conservative approach towards growth, but of course in a way that growth is stable and will push it forward.
We are growing by 15%, but it's going to be certainly conservative in terms of a single ticket size to a single borrower. But even there, we are doing a reasonable amount of funding. If you're asking whether we're going to do a 10,000 crore funding to a single project or a single exposure, the answer is no. But if you say, would you do under certain circumstances 2,500 crores, we would. So I think we're going to continue with what we've been doing. The balance sheet will continue to grow. Retail balance sheet will continue to grow faster than the others. Our balance sheet growth in agriculture and MSME will meet every single regulatory requirement and will exceed it. Our corporate bank should grow. But concentrated risk, we have to be careful about it, simply because the risk absorption at this point of time with the level of NPA imposes certain reason for us to be conservative.
Fair enough. One last question. Your term is set to end sometime later this year. Do you think that there's going to be a thought process that now that this merger is over, probably the new bank will need continued leadership and you probably look for an extension?
Well, you could argue many number of ways. And the point is, the first thing one has to, what the role we have in the jobs we do is to ensure we build systems, procedures and processes that enables growth to be institutionalized and is not dependent on any single individual.
Sure.
Second, for all the credit you might give me or the debits you may give me, the fact it's at the end of the day a teamwork, and there is only so much any one individual can do. So I don't think that the future of the organization is necessarily tied in any manner to what would happen with me or the organization. I think this is a strong bank. It'll be able to attract enough number of good people to run it. At the time when the decisions are going to be made, we should make a thoughtful decision as to who's the right person to lead it. It could be me, it could be somebody else, and then we have to make the decision at that point of time. That's how I would look at it. That's how I look at it, and I'm not vain enough to believe that my continuation is necessary for the betterment of this organization. There are good people here in the bank and outside, and I think the right decision will be made by the board, by the government, and shareholders, and so on. So that really is what I would leave you with. Let's discuss any of this renewal when you come closer to the term. At this point of time, there is no need to focus on these issues. But all I want to say is that whatever has accomplished so far is a result of all of us working together. It is never an outcome of a single person, and one should not be vain enough to believe that one continuation is necessary for the health of any organization.
Fair enough. Thank you so much, Mr. Jayakumar, for joining us on Bloomberg Well.
Thank you very much.